Guys, welcome to Crypto Insight. I've been a professional options trader for 20 years, and about a year ago, I switched my focus from equity options to crypto options. Why? Because of the huge volatility and opportunity in the space. Trading Bitcoin has allowed me to multiply my capital in a safe way. And in these videos, I will give you the benefit of my experience and insight into how I'm reading the crypto vol market and using options to either hedge or speculate on future expected moves in the crypto space. Don't forget to subscribe and like the video, and I hope you find this content useful. Thanks. All right, so let's talk crypto. So now this week, I thought I would, not apart from just going over the charts and talking about vol, I thought I'd share some on-chain stuff that I've been looking at, which is quite interesting, right? So you have Glassnode is a website that does a bunch of on-chain analysis to give you insights into what's been going on in Bitcoin in terms of the holders of Bitcoin of various sizes in their wallets and various durations in their wallets to try and give you some information there, basically. And it's quite interesting, some of the stuff that they show, right? So, so we think about what's been happening. Obviously, you had that big sell-off, particularly after the China ban. We had that last leg lower, China ban on mining, right? So should be no surprise that the hash rate on Bitcoin has dropped. And it was claimed that the miners were going to be dumping a load of coins because they were going to have to like shut down and relocate out of China, and that was going to cost. So you know, the sell-off there was being blamed on that. Now, what's interesting is some of the on-chain data has some conflicting messages there, right? So if you look at this is a chart courtesy of Glassnode, and they have the balance in miner wallets, okay? And they also have the price of Bitcoin in the gray. So you can see the actual dramatic drop in miner wallets balances happened earlier in June, right? And that was the original drop, right? It wasn't after we got the China ban. So maybe it was a case of they knew what was coming, basically, and that happened early. And if you look at what those balances have done over the last few weeks, they've actually stabilized and kind of drifted back up. Yeah. So maybe we've kind of seen that capitulation from miners, and that's kind of done and dusted now. That's certainly what the on-chain data might be suggesting. Yeah. But anyway, if we move back to the chart, move back to the Bitcoin chart, you know, that big level there at 28, 29 held. We're now starting to form a little bit of a upward sloping baseline here. But we've struggled to really get above this 50-day moving average that everyone's talking about at 36,000. Yeah. So still some work to do on Bitcoin, but things not looking too horrendous. Yeah. And another really interesting chart I saw on the on-chain stuff was like a sign of capitulation, right? So some of those metrics showed you that there was a big spike in realized losses when we went down to that level in that 29 area. Okay, so let me share this. This is the one. So what does this show me? So net realized profit or loss. Okay, so we had that move down to 28 recently, and you had these massive spikes in realized losses, people liquidating positions and taking big realized losses. And if you look back like 5 years, when you see these big spikes in realized losses, that often signals a capitulation in the market and we get a recovery, right? So, you know, you certainly had that, you know, in early 20, big spike in realized losses there. You also had that in 18, 19, and we've had even bigger numbers. Now, the bigger numbers you could argue are just because the absolute level of Bitcoin's gone up a lot, right? So maybe the fact that those numbers are so much bigger than those previous losses we've seen, maybe that's not that important. But the point being that spike that we're seeing has often kind of coincided with an interim low in the Bitcoin price. And so again, that gives you some comfort that maybe we've seen the capitulation that we need to stage some kind of meaningful recovery. Okay. So that's kind of what I'm thinking on Bitcoin and some interesting charts that I saw. In terms of Ethereum, you know, as you guys know from last week, I had suspected that Ethereum was going to outperform. Why did I think that? Well, we were kind of looking like we were going to break that 2200 area, which I thought was important. And then also this chart was the main one, right, where we touched that 0.055 support level in the spread, and we've bounced aggressively off that, right? So that worked pretty well. We've got about a 20% rally relative on Ethereum relative to Bitcoin. I would say that this kind of hurdle, next hurdle is probably another 10% higher on the relative spread up here at 0.072. If that was to break, then all hell could break loose on the upside for Ethereum, basically. So I'm likely going to contain Ethereum on the first test, I suspect, but kind of watch this space, because if that goes, then this chart setup looks like it looks very bullish if that level breaks, basically. Yeah. Let's have a look. So now let's move over to the vol market and see what that's been doing. Right. So what's vol in Bitcoin been up to? So if we look at the kind of term structure, we can see where it was a week ago, a couple of weeks ago, and then where it is now. So you see it got itself inverted obviously a couple of weeks ago, started to flatten, and now has kind of collapsed in the front, right? So we see all the front expiries in July back to around 85 vol here. And then it's back to contango, so back to upward sloping. Yeah. So that front end collapsing is just a sign of kind of stabilization. That term structure going back to contango, that normally happens when markets stabilize. Obviously, we've been chopping up in this range when the range is kind of ever tightening at the moment. 7-day realized is completely collapsed, right? So the 1 week realized, if we bring up some of the realized numbers here, and I home in on kind of what's happened in the recent times. So you can see, you know, whilst 30-day realized is kind of hanging in at around 90 odd, where is it? 97 or whatever. 7-day realized has rolled over to around 60. Okay. So obviously that's going to, if things are stabilizing, then that 7-day is going to lead the 30-day. And there will be a point where some of those big moves are going to move out of the observation, and that 30-day is going to drop, basically, right? So, you know, the 1 month implied volatility is moving in sympathy with the 7-day realized, because it's anticipating that we are stabilizing, and it's kind of forward looking, and that's why the kind of implied vol in the 1 month is coming down, whereas the realized kind of stubbornly hanging up there, right? But that realized is a bit of a lagging indicator, right? Because it contains those big swings from previous. So look here. That shows the implied volatility. The realized, here we go. Can you see the realized? It's not really deciding to play ball. All right, but anyway, but you can see that implied just steadily been grinding lower, basically. Okay, so implied's back at 85. Kind of where that stuff lives when not a lot is going on, basically. And yeah, that 7-day realized it's down to 60. That had come down from 120, right? So that is actually halved. So it's quite a dramatic stabilization. But the vol market seems to be pricing that we're going to stay relatively calm for now. Okay. Another interesting sort of thing that I noticed was upside volatility got smashed in July. So we had expiry at the end of June. Once that passed, what happens? You have bandwidth to do, you know, more selling in the front end. So you can see here from a week ago, the upside volatility in July has come in, you know, a good 10 vol points, basically, right? So that kind of is explainable. But once those shorts that you might have roll off in June, then you have firepower to go and do more call overwriting in July. And I think that kind of helps explain why we got that selling and we got a bit of supply on the upside there. Yeah. And then lastly, Skew. What's Skew been up to? So it's $25 Skew. We bring that up and we kind of look at, actually, let me home in on, again, more recent history. This thing's being a bit temperamental. Right, here it is. So that's kind of the last week. And then if we bring up a few other expiries on here, maximize, there we go. So you see, you know, the green and the gray are the short dated Skew. So that's the 25 delta risk reversal. So it's showing me that puts are trading above calls by about 12 to 14 vol points. It's a pretty hefty Skew in the short end, despite the market stabilizing and bouncing, right? Which is interesting in itself. And then you've got 90-day Skew still for puts, but only barely, like 2 vols over. And then you've got 1 year Skew, 5 vols over for calls, basically, right? So it's showing you where the kind of supply and demand imbalances are in the upside and downside. And basically, it's just saying to you that the market still perceives in the short term a break of 28 to the downside, and we're going to get a bit of a violent high vol crash, basically, right? So that's why that downside put wing is going to trade expensive, because people are still worried about that dynamic, right? Suggesting that until we get back above maybe 45,000 on the upside, then that perceived risk doesn't go anywhere, because we're still close enough to that support region at 28, 29, that if that were to go, then all hell breaks loose, right? So that's going to keep a bid for that put Skew. But then on the longer term horizons, like the 1 year stuff, people are still willing to just put some money into upside calls to speculate on obviously the massive upside that they think crypto has as a whole, basically. Yeah. In terms of kind of positioning, you know, stuff I've started looking at a bit more in crypto, you know, the large gamma strikes seem to be in the 36 and 40,000 area at the minute. Like I say, not sure how much impact that has on this space, given how high the vols are, but something I've started monitoring. So we've got 36 and 40,000 calls are the big sort of open interests of where the gamma is on the call side. And then on the put side, the biggest puts we've got are 32 and 30,000, basically. Okay. In terms of max pain, another thing I keep an eye on, again, not overly predictive, but it has been quite good at explaining like where the market is likely to stick around if we get close to expiry. So if I bring up July, you see the max pain is down to 36,000 now in July. So if we're in the vicinity of 36,000 a week before July expiry, then this starts to maybe factor as a more important sort of indication of where we're likely to hang around. Yeah. For now, I'm not reading too much into it. Yeah. And then the Ethereum Bitcoin vol spread continues to grind a bit lower. So about 7 to 10 vols now, Ethereum over, as 1 month realized kind of converges between the two. So in terms of 1 month realized, they're kind of doing the same thing, Ethereum and Bitcoin. And that makes sense that spread between the implied vol should come in. Now, I think Ethereum's generally going to hold a bit of a premium, because you tend to have a bit more buying activity in Ethereum anyway, as people see like potentially more upside. So there's more appetite to buy calls. Some of that call skew is a bit more pronounced across some of the other maturities in Ethereum. So, you know, if Ethereum did get a catalyst, then it could outperform by quite a long way, as we've seen in that relative chart that I showed as well. Speaking of catalysts, the EIP 1559 update, which was previously supposed to happen by end of July, sounds like it's going to happen early to mid-August now. Okay, that's the date that's been kicking around. That's the one where they're going to change the way the fees are done to make them more predictable and less volatile. Okay, so that's not necessarily going to reduce the fees, and it doesn't even impact necessarily scalability of the network. That's more an ETH 2.0 type thing that happens next year when they bring in sharding and things like that. But the burning of coins will introduce a kind of supply cap, which should increase the store of value case for Ethereum, which it otherwise didn't have. So that might steal some market share away from Bitcoin. and into Ethereum. That's the general idea. Okay. But even though that release of 2.0 probably has more impact, I just think the press that this upgrade will get as and when it happens, assuming it happens in August, may lead to some more outperformance of Ethereum in the short term. But as we know with previous catalysts, and we played the previous catalyst of the futures listing on the CME, sometimes you get this big rally into the catalyst, and then once the catalyst happens, it's a buy the rumor, sell the fact. So you actually get a sharp reversal as a bunch of spec money has come in chasing the catalyst, basically. So you might get some excess volatility around that sort of August date whenever it comes. For me, you know, I've already said how I'm playing this, right? I bought Ethereum calls to August. I sold them to Bitcoin. I did it relatively premium neutral because I think Ethereum's got the potential to rally on the upside. And also I did that at a nice entry point in the spread. So for me, that trade's been working out pretty well so far, but I'm not doing anything with it, right? I think it's got plenty of room still to play out. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. I'd also encourage you to sign up for a free trial to our live and interactive Macro Insight Zoom call. As part of our trading community, as well as the call, you'll also get access to our Telegram chat and our weekly market reports. To find out more, you can also connect with us on the socials. All the links are at our website, www.options-insight.com. Thanks.